Hey, what's up guys? John here. Some major changes are going to be coming to Florida's housing market, and that's why I believe we're going to be stepping into the biggest housing bubble that ever existed, and it's going to pop in the state of Florida. I think it's going to be worse than New York City, San Francisco, Los Angeles, some of the hot spots in Arizona and Utah and Texas. I think all those are going to pale in comparison to what's going to happen in Florida. In this video, I'm going to break down the hard facts. This is coming from someone that lives in Florida. I love Florida. Florida's been incredible the last few years, but there's some really big curveballs we got to talk about. Hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on. And if you want to invest in distressed real estate, potentially grow and scale a business, but you need funding, or possibly do a balance transfer to get out of high interest credit card debt, but you need great credit to do it, we'd love to be a part of that success at greatcreditfast.com. That's greatcreditfast.com, or give us a call at 561-430-5900. That's 561-430-5900. So take a look at this. In 2030, they say the population will continue to grow, followed by about 5 million new residents. About 1 in 4 Floridians will be 65 or older. Non-ethnic whites will become a minority by 2030, and nearly 1 in 5 will be foreign born. People will pack the cities. So to put it into context, right now Florida has about 10 million total housing units. 10 million housing units, and 1.7 million of those 10 million sit completely vacant. So this is mainly snowbirds, people that have a second home here. A lot of people that have invested in real estate, Airbnb, and other investments over the years. But Florida has always been that retirement state. But what happens when we look at the great financial crisis and other boom and bust cycles? Florida gets hit generally much harder than other locations. We see much higher home appreciation during the good times and much lower depreciation during the bad times. So from 2020 to 2022, there's been about 53.28% as an average home appreciation. So 50%, that's pretty incredible given the fact that normal home appreciation is about 3% a year. Now granted, many homes have appreciated wildly over the last few years, but now what we're starting to see is a really big change in borrowing cost. So mortgage rates before, you were looking at about 3%, 3.5% for a 30-year fix. Now, if you have the average credit score in America, which is a 698, you'd be looking at 8.169% for a 30-year fixed. If you had a little slightly better than the average credit score, you'd have about 7.5% for a 30-year fixed. Now, some mortgage loan officers might be able to do something a little bit better. There might be some loans out there that are a little bit better, but moral of the story is home mortgage rates are in the low 7s or even high 8s or low 8s, depending on how bad your credit is. If you're coming at a 640, or, I mean, it's really incredible how these rates just kind of jump around. But it's generally somewhere around 7-8%. So if you start to look at how this actually plays out on a traditional median home price of $436,000, with 10% down, it's about $3,428 per month. So you would have to comfortably make $10,000, $11,000, $12,000 per month as household income to be able to qualify for a median home price. That's pretty substantial given the fact that many, what felt like many years ago, 3% mortgage on that same term, it's you probably have to make $7,000 a month household income, $7,000, $8,000 a month household income to be able to comfortably afford that. If you have 2 people working, making $50,000, $60,000 a year, you can afford it. Now what we're going to start to see though are these really big changes. U.S. foreclosures rise 21 months in a row. And so as this is happening, we're starting to see Florida electric bills continue to increase. We're seeing costs rise. We're seeing real wages go down. So if inflation, many would argue, is 5%, 6%, 7%, you have some people even saying 10, 15, 20%. If the cost of everything is going up that much and real wages are going down, there's going to be an affordability crisis. And what do people generally do when they're pushed against the corner? They sell things, houses, second homes. That's what I think Florida is. Florida is prime for that second home to be listed for sale or to be listed for rent. And that is what generally happens, especially when we start to see this economy really change and people start to get in defense mode. Florida's immigration law could impact state's construction industry. So they're going to really start to pursue illegal immigrants in the state of Florida, specifically companies that have 25 or more employees. They're going to be able to start to seek these really big fines against the owners of these companies for hiring illegal immigrants. So they are going to likely see, we are likely going to see, increased construction costs in the state of Florida. As that is happening, home insurance prices continue to rise. This is one of the big concerns that I have about insurance companies in Florida that are leaving, is we're starting to see a lot of policies flowing to Citizens, which is a government-funded insurance company. Now, if Citizens continues to gather more and more and more market share, and then they wanted to change policies, change prices, change deductibles, they'd be able to do whatever they essentially wanted to because they have that somewhat monopoly. And as they're growing 7,500 policies a week, and some are talking about, rates jumping 40%, some are even saying 60% increases. How do people afford this? Right? This is the big question. How do people afford it? Florida is not cheap. Years ago, it was cheap. You could come here, $300,000 get you a decent house. Now, if you're in any decent area, it's $600,000, $700,000 for cookie cutter house. Prices are through the roof. I don't understand how people are going to be able to afford this, especially when we look at a lot of these situations like Fort Myers that just happened last year. You had the Miami building collapse, that situation. You had the Fort Lauderdale situation that happened 90 days ago, 60 days ago. You have all of these curveballs hitting insurance companies. What I think is ultimately going to happen is I think that a lot of people are going to start getting squeezed out of their homes in the state of Florida. And a really, really big indicator of this is something Glenn Kelman, the CEO of Redfin, came out and said. He said, people buying homes in Florida, flood-prone coast will likely have trouble selling in the future, right? He goes on and he talks about this, and this is another Business Insider. People buying homes in Florida, flood-prone, will likely have trouble selling. So this isn't just going to be selling. This is also going to have a lot of ramifications on a refinance, pulling money out of your home. So Florida has experienced 5 deadly declared disasters since 2000 in the form of strong hurricanes, tropical storms that have caused flooding and severe housing damage and ultimately cost the state, insurance companies, and taxpayers billions of dollars. However, despite the environmental devastation, Americans continue to purchase homes in natural disaster-prone state even though home sales and values remain at-risk areas of Florida most susceptible to sea level rise. Glenn Kelman, the CEO of real estate broker Redfin, said the problem is likely to escalate as this ramps up. The insurers, the lenders, the appraisers, everyone is stepping back from these coastal properties because they are vulnerable to superstorms that are becoming increasingly common. Kelman said as of January in a podcast with Barron's, adding that many prospective buyers cannot afford the housing costs that come with living in these risky areas. That's what I think is going to happen. I think we're going to start to see a situation in which a lot of people locked in these really low interest rates here, the 3.5%, 4%, 2.85%. And now rates are starting to climb. And a lot of people are hoping that rates are going to start to come back down. But the average mortgage rate was 7.75% since 1971. And so if we have a situation where a lot of households are sitting on record high debt, $17 trillion in record high debt, and many of these people are hoping that rates start to go down so that their home value likely will continue to increase, because as real estate cycles will tell you, low interest rates mean high property values, high interest rates mean lower property values. So if people have a situation where these high interest rates are basically strangling the equity in their homes, and they don't have the ability to be able to take money out of their homes, but yet the economy is contracting and the cost to service that house is getting much, much more expensive, what you're ultimately going to see happen is people walk away from their homes. So Florida, I believe, is a very unique place. It's a place where a lot of people ran out and dove into Florida's real estate market the last few years, just spending whatever they wanted to spend because the cost to borrow money was super cheap. Inflation was a very, very big concern, and people moving from expensive cities in Los Angeles and San Francisco and New York City, spending $4 or $5 a month, could come to Florida, buy a beautiful house for $1 million and pay $4 a month for it. So we're going to start to see some really, really big changes. I think Florida is going to be an incredible investment opportunity once these changes start to get realized. And I think that that's happening slowly, especially you look at what's going on here with the 21 months of increased foreclosures. To me, it looks like we're in the beginning stages. I would suggest probably in the next year, 2 years, we're going to really start to see this market get pulled out. Another thing to look at is a lot of people that were buying multifamily. They were doing something called a 1031 exchange where they would sell a multifamily property in a different area, and then they would roll the profit and the equity into a deal here, which would be a non-taxable event. And so people were just rolling out big exchanges into South Florida, buying 3 caps and 4 caps, meaning if they paid all cash to the building, it would be a 3 or 4% return. But now the borrowing costs are skyrocketing, insurance is skyrocketing, and the market's starting to change, a lot of people are going to, get hurt on that. But what do you think about this entire situation? Where do you see the Florida housing market going? I love Florida. Again, I love Florida. I love what Florida is doing, especially the last couple of years. It's been incredible. But you have to look at the writing on the wall. Writing on the wall says Florida's housing market's in some big trouble. Drop it below, hit the like button, subscribe here, and on my second channel. I'm going to post on this channel every Monday. We're likely going to do a call-in show. We'll be able to call in. We can talk about what's going on in the economy. And then every Friday, we're going to have a podcast. And then every Wednesday, I'm going to drop a current event video, talk about what's happening in the economy. So be sure to subscribe here. And if you need help fixing your credit, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com. Give us a call at 561-430-5900.